Welcome to another Monday Market Update with Kristen Mason Coreas, owner of the Homes by Mason team. Hopefully you didn't catch me blowing my nose. I was doing that because I am a little nasally. I still am recovering from a cold. So I was trying to get out what I can get out to be as less nasally as possible, if that's a thing. So in any case, today is Monday, May 5th. I was about to say April. It's not April. It's May. Holy cow. The fifth month of the month. Rewind if I could. I can't. 5-5. Fifth month of the year, fifth day of the fifth month of the year. I can't believe it. We're almost halfway through the year. It's crazy. So what's happening in real estate? Let's take a look together at what is happening. And interest rates are staying relatively stable. 6.76 was the average for a 30-year fixed interest rate as of last Thursday. And that is right smack dab at what our 4-week average is, 6.76, and a touch higher than our year average. The good news is we're below 7. We're happy to be there. We're happy to have some level of stability. I mean, it'd be nice to have a lower interest rate, but at least there's some stability right now in a time when there's a lot of instability and a lot of uncertainty. So a slight decline from the week before, but again, basically hovering right there below 7% is where we have been and expect to be for a while. So in terms of national economic news, I was surprised to see some of this. Inflation flatlined in March for the first time in a year. And so that's good news. Will that stay? We don't know, because again, back to that uncertainty. What's happening with tariffs? We don't know. Are they on? Are they off? And how's it going to impact the economy? Remains to be seen. I saw something, I guess it's not in here. People have essentially reacted early to the expectation of tariffs. So there was a lot of purchasing that happened, including myself. I know I went to BJ's and bought some of our basic home goods supplies to have prior to tariffs, if we're going to see tariffs. So I did that myself, and a lot of other people did that. So there was an increase in purchasing in expectation of tariffs. So hiring slowed as tariff fears spooked businesses. So again, people don't know if they're going to have extra disposable income to pay for extra people or not. That remains to be seen what's going to happen with hiring and employment. The FHA has made some changes in regards to access to foreclosed homes. And so what that means for buyers is quicker access to foreclosed homes. And that means an increase in inventory. So it always boils down to supply and demand. And so there may be increased supply as foreclosures come to the market sooner. There's not an increase in foreclosures. That's not what we're saying here. It's just quicker access to foreclosures, which may result in sooner inventory, increased inventory. Pending home sales increased in March by 6.1%, the biggest gain in a year. And the experts believe that was as a result of falling mortgage rates and a strong economy and a strong job market. All of those things may change. So will we continue to have increase in pending sales? Will we continue to have falling mortgage rates? Will we continue to have strong economy and job market? We don't know. So hard to say whether those trends will continue. And again, despite volatility about the tariff announcements, mortgage rates ended slightly above where they began. It's relatively stable, as we've talked about. The Mid-Atlantic region, what's happening in Virginia, DC, Maryland, Pennsylvania, West Virginia, Delaware, and New Jersey. Overall, list prices are continuing to go up. That's the trend that we've seen. And supply, however, is at its highest level in 3 years. And contracts are sinking. So all of these things will interplay with each other. So if supply continues to go up and contracts continue to go down, then we should probably expect to see list prices go down. But we haven't yet. And that you'll continue to see that in the rest of our data. List prices do continue to increase right now. They may catch up later if we do see supply going up and demand going down. So, and it, as a result, this other note here that I've underlined is that if prices do continue to increase, that also may have a downward pressure on demand, especially in a time of economic uncertainty. So I expect these things again, the prices in particular may change if these other trends continue. It'll just be a lag. It's lagging behind what those other trends are that we're seeing. For the larger DC metro area, showings are up a big amount, 35% from the week before. So normally in the spring, that's what we'd see. That is a sign. That's a good sign for demand, and up 3.6% from last year. So that may be a result of a slight decrease in interest rates, and it just may be normal spring buyer activity that maybe people put on hold. Maybe people did slow down and pause on their spring buying activity, waiting to see what was going to happen. But then at some point, there's a lot of people PCSing. There's a lot, so there are people going to be moving into the area regardless. But I guess some of those people didn't know and maybe waited until the last minute to be sure that they were moving. So this, to me, is a good sign, that increase in buyer activity, and hopefully we'll continue to see that in our area moving forward since we are in the spring real estate market. However, purchase contracts were down 12.4% from the year before and then down 9% from the week before. So showings are a prelude to contracts. So maybe next week we'll see an increase in purchase contracts because of that significant increase in showings. Time to contract a little bit slower by 8 days from last year and slower by 5 days from last week, a median of 26 days. And I am seeing that on the front line as well. Buyers are taking a little bit more time with their decisions. They have the luxury to do that in the market that we're experiencing right now. Until you don't, though. So be careful. Always be alert, because this is, in general, a fast-moving market and things can change like that. New listings, so increase in inventory. We do continue to see that trend up from last year by almost 23%, up from last week by 27% in terms of new listings, and then active inventory up by 53.5% from last year and up just 10% from last week. Median list price, as we saw, also up by 6.2% from last year, up almost 4% from last week. So those trends are basically in line with what we saw in the Mid-Atlantic region. Now let's look at the hyperlocal data. This is the most current, most local data that we have for you from Homes by run with our own hands at Homes by Mason. So I'm always excited to share this with you each week, because not everybody is looking at this data. And I feel like it's good insight to be looking specifically at what's happening in Arlington, Alexandria, Fairfax, and Falls Church, where we do most of our business at Homes by Mason. So new listings are at 778 last week. So this goes up until yesterday, right? The data from last Monday until yesterday. 778 compared to 732 the week before. That's an increase of 6.3% compared to the week before. Compared to last year, also up by 38%. So new listings increasing is a trend we've continued to see. And contracts are down a little bit, 349 compared to 369 the week before, down 5%. Not a big drop compared to the week before. And compared to the year before, this number is better than what I've been seeing. So it's down 21% from the year before. But remember, when you look at the prior weeks, we were looking at year over year decreases from 40 to 50%. Last week, we saw just a decrease of 10%. So just 10%. I was happy to see that lower decrease compared to the year before. So we've doubled. We're at 21% compared to last week, but we're not as high as where we were. We're not in the 50s, the 50%. So this gives me a little more hope for the rest, I'd say the rest of the spring market. Again, I'm thinking that maybe people paused, and maybe those people PCSing paused And now we're starting to see that activity maybe a little bit later than we normally would have. So a 45% demand to supply ratio. That tells us that almost half of the homes that came on the market basically were eaten up by contracts, leaving, approximately half left over, which will then increase supply by that much. So that is your Monday market update for this week. And if you ever want to talk about what is happening close to you and how it impacts you directly, reach out anytime. You can reach me at 571-210-1866. Call me or text me there. In the link below, you can get on my calendar. And I'm kind of a geek with this stuff. I enjoy looking at the stuff, talking about the stuff, and it's important for you. I want to work with educated consumers. You all are the ones that make the decisions. We're here to share the information with you so that you can make informed decisions. So I will be back next Monday to share that with you again. I also send out a pre-weekly market update on Fridays. I send an email out to everyone in my database with that Friday market update. And we have homeowner tips. We have our new listings and our coming soons and behind the scenes at Homes by Mason, which is kind of fun. If you want to get on that email, call us, text us, email us, and there's not a link down below. We might add that. But yeah, if you want to get on our email list, let us know. We'd be happy to include you. Thanks for watching, and I will be back next Monday. Have a great week.